All right. I know when we start talking about economic things, kind of complicated economic things on the show, I know most people out there expect me to invite the author of the book, The War on Small Business, on the show, my friend Carol Roth. But I'm not going to do that today. You see, I found a different alternative, someone who can really break down inflation for us. Let's go to Joe Biden.
For example, one of the reasons why I decided to talk about the need to deal with the operation and the gouging that occurs in some of the pricing of beef and chicken and other things is that that's why that's why I indicated to you we're going to look at whether or not there's a violation of antitrust laws and what they're doing. So there's a lot to look at, but the bottom line is that I think and anyone who would prefer, as bad as things are in terms of prices hurting families now, trade this Thanksgiving for last Thanksgiving. Jen Epstein, Wall Street Journal. Excuse me.
You know what? On second thought, let's bring in Carol Roth. Carol, I guess I got a little lost in there. Could you maybe break down why the prices are so high for me, please?
First of all, I would like to say with that super clear explanation from Joe Biden, I'm really glad that he is proposing another like $5+ trillion in spending. It seems that he knows exactly where it should be going and the return on investment we'll all be getting. But as you and I have spoken about many times, Jesse, you can't just turn off an economy and turn it back on as if you were power cycling a modem and not expect disruptions to occur. So not only did they do that, but we had this continued stimulus, including, by the way, this last March when things were supposedly starting to open up again, when we were having the vaccines, when things were getting better, more stimulus, extended unemployment. So things that are impacting the labor market and the supply chain and basically disrupting supply and demand and creating an imbalance there. And when you have a supply and demand imbalance, it goes one way or the other. And unfortunately, the way it's going this time around is that it's creating higher prices. And the other piece that I would add, which Joe Biden so clearly did not articulate, is from the Federal Reserve, who, along with making sure that the government could spend this money via stimulus, has also been printing trillions of dollars and putting that into the market and creating more money supply. And when you have more dollars chasing the same, or in our case, a fewer amounts of goods and services, again, that drives up prices.
Carol, when you say printing trillions and putting it into the market, I think people get confused. When I say people, I'm talking about myself, as to what exactly you're talking about here. Okay, the government just printed $1 trillion. They have it they have it right here. Are they just walking into Merrill Lynch and just handing it to them? Is it a loan? How are they doing this?
Okay, so basically there is an entity called the Federal Reserve, which it derives its power from Congress, but it's totally independent, you guys. And it gives its profits back to the Treasury. So again, totally independent. And oh, by the way, it's charged with the nation's monetary policy, things like stabilizing prices, which obviously they're doing a bang up job doing, and normalizing the employment rate, which again, doing a bang up job and something that you would really have to give out to an independent entity. And the Federal Reserve, what they do is they don't actually even go to the Treasury and have them print any money. They make an accounting entry. They make up money and say, we now have trillions of dollars, which, by the way, if we did that and tried to go out and spend it, it would be considered fraud. But when they do it, it's considered monetary policy. And like you said, they go out to these brokers, these investors, and say, hey, do you have any Treasury securities? Which, by the way, is, again, the government's issued debt. We'll buy those from you with these made up dollars. And then these banks and intermediaries have this money to go out and loan out and make other purchases. So basically, again, it's money that is created out of nowhere. And what it does is it devalues the dollars that each of us have. It pumps up asset prices and it brings down interest rates. So if you're somebody who is a saver or a retiree that's trying to earn a few bucks on the money that you saved, too bad, you're out of luck. That benefit is being shifted over to Wall Street. So it is really this immense transfer of value from Main Street to Wall Street, and it's done with this very cozy relationship between the Fed and the government.
Just want to make sure I'm clear about this here. We are buying our own debt with unbacked money that we printed.
Yeah, so the concept of this is called monetizing the debt. There's something out there called modern monetary theory, or I call it magic money tree, which is being pushed by the progressives. And the whole idea is the government can overspend. Oh, and since we have this mechanism, we can go out and buy our own debt. And while everyone goes, well, that's insane. I mean, it's exactly what we've been doing. The fact that we've had these trillions of dollars of COVID relief money. Who do you think is out there buying the debt when we can't pay for that? It's not China. It's not that there's these demand from investors to go out and buy the debt of the government. We're doing it with fake dollars from the Fed. So we're basically are monetizing our own debt. And as you can imagine, that's a cycle that doesn't end well eventually.
Oh, no, I'm sure it's fine. I'm sure that lasts forever. All right, Carol, the Fed is meeting soon, and they're going to discuss things like interest rates and money printing. And here's the reality of it. Most people, when they think about interest rates, they want them low for understandable reasons. You don't want to be paying 17% on a car. If you're watching this, never pay 17% on a car, but you understand what I'm saying. People want interest rates low. Should they?
So the Fed just finished up its meeting earlier today, and they are going to keep interest rates not just low, but like below historically low. Their targeted interest rates for banks to lend to each other is at 0%. And as I was alluding to before, while this may sound like a good thing, the people who really benefit are the wealthy that already have access to capital or are using that debt to go out and purchase assets. If you're using debt for your expenses, it doesn't really benefit you in the same way. And particularly, as I said, if you're somebody who is trying to save or retire, it completely disrupts risk in the market. So if you say, I want to earn a couple percentage points on my money, you're certainly not going to get that from the bank. And then you try to go into the stock market and everything is inflated in value. So you have to take on more risk to earn that same type of return that you would get if we were normalized. Usually when they talk about normalized target interest rates, before the Great Recession, they were at like 5%. Their target, at least on the Fed funds rate side, is around 2%. So holding that piece down at zero shows that that's something they're doing to suppress the market. And as I talked about before, transfer that wealth from Main Street to Wall Street.
Hey, thanks so much for watching The First on YouTube. If you liked what you saw, go ahead and like and subscribe. You heard me. Like it, subscribe. You'll get a lot more of it and a lot more of me.